The GDXJ is up 10 times as much as the S&P 500 this year. 10 times as much. I haven't just been shorting the stock market, and that's not how I've expressed my bearishness. I've expressed my bearishness by buying gold stocks. That's how I've been bearish, by being bullish on gold stocks, and the trade is working out. The GDX, that is up 19.33% over the last 10 years, is cheap. So even though gold stocks have doubled this year, if you buy them now, you're getting them cheap. They're still cheap relative to where they are going to go. So don't get into the, oh, I can't buy them now. It's too late because they've doubled. Yeah, they'll double again and double again and double again.
The gold and silver bull market has just gone nuclear, and Peter Schiff says this is only the beginning. The GDX and GDXJ, the major gold mining indexes, are up to 10 times higher than the S&P 500 this year, and Schiff warns that those who hesitate now might miss the most explosive wealth transfer of the decade. Gold just broke its inflation-adjusted all-time high, silver has hit a 14-year high, and central banks are quietly dumping U.S. treasuries and loading up on hard assets. The Federal Reserve is signaling rate cuts into persistent inflation, which Schiff says is like pouring gasoline on the fire. In today's breakdown, we'll cover why this may be the biggest gold and silver bull market in history, why Schiff thinks we're still early, and how this move could reshape everything from the stock market to your personal savings.
It's going to be very frustrating for the Trump administration and for the Fed. Now, some of you may say, well, gold is rallying. Silver hit a new 14-year high today. Finally, gold didn't. I mean, gold has been a little subdued the last couple of days. It's trading around 3,635. Oh, by the way, just this week, gold finally hit an inflation-adjusted all-time high. Now, not real inflation, but whatever the CPI adjustment is. We finally took out the $825 high from 1980. But this is not the end of something. This is the beginning of something. We are just getting started here in gold and silver. But gold and silver are also rising into this rate cut. And you may say, well, Peter, if you think that it's going to be a buy the rumor, sell the fact for bonds, why wouldn't the same hold true for gold and silver? Maybe gold and silver will sell off on the rate cut. Possible. It's possible. But I don't think it's that probable, because even though gold and silver have rallied, I don't think they've rallied nearly as much as they should. But also, there's a big difference between the gold trade and the bond trade. Rate cuts are bearish for bonds. Rate cuts are inflationary. It means the Fed is turning its back on 5% inflation. That's probably going to become 6 or 7, and is instead choosing to die on the hill of employment and fight that battle. To hell with inflation. So once the Fed does that, that's a big signal to get rid of your bonds, right? Because the biggest destroyer of the value of bonds is inflation. And of course, rate cuts mean a weaker dollar. So why should foreigners want to buy our bonds if we're going to repay them with dollars that are worth less in their own currency than the dollars they loaned us, especially when we're reducing the rate of interest that we're paying them? So these rate cuts are bearish for bonds. So even though bonds have rallied on anticipation of the cuts, the event they anticipated is actually bad for bonds. So they shouldn't be rallying. So that's another reason why they should sell off and why they probably will sell off. On the other side, rate cuts alongside of rising inflation are the most bullish thing you could have for gold. So gold should be rising in anticipation of these cuts, and it should keep rising following the cuts. Because as people want to get out of their dollars and get out of their treasuries and mortgage-backed securities and whatever else has got a dollar coupon and a dollar principal payment attached to it, what are they going to buy? Well, if you're a central bank, there's really only one choice, and that's gold. So the central banks are going to be loading up on gold as they're unloading on U.S. dollars and treasury debt. So gold and silver should keep rising even if there's a slight buy the rumor, sell the fact move on a rate cut. But again, I wouldn't even wait for that. Don't even try to be tricky. As I've been saying, you got to buy gold and silver. You don't wait, you just buy it. If you don't have it, you need it. And if you have some, chances are you need more, right? So you got to go to Schiff Gold. I mean, I like a broken record. And again, people can say, well, Peter, don't you make money when we buy some gold and silver? Yeah, I make a little money. I got plenty of money. The reason I want people to go to buy Schiff Gold is because they need to own it. I mean, I've been telling people you got to own gold for 25 years. Look where it is. It started. It was under $300 an ounce when I started. Look where it is, right? There's a reason that I want my followers to own gold and silver. That's why I set up Schiff Gold. I set it up because I was telling people to go buy gold and silver, and then they would go buy it and get ripped off. So the reason I'm telling people to buy their gold and silver from me, it's not just because I make a little money, but because I know you won't get ripped off. And you don't get ripped off because I do make a little money. I don't make much, but I make it up on volume, but I don't make it on each individual transaction. But I want my followers to own gold and silver because I don't want them to go broke, right? I want the people that listen to me to have money. Right? One day we're going to need that money to help out the people who don't listen to me, which, unfortunately they far outnumber me. But also look at gold stocks, right? I've been talking about these stocks now. I've been pounding the table on these stocks. So the GDX, right, which is the index of the biggest gold stocks, is now up 103% on the year. And the year ain't over. 103%. This is September. We haven't even hit the fourth quarter yet, which I think will be the strongest quarter of the entire year. And we haven't even gotten to it yet. We're up 103%. Now the GDXJ, which has some smaller mining companies, not the really tiny ones like some of the ones that we got at my gold fund. But now these ones are moving. So now the GDXJ is outperforming the GDX. It's up 111% on the year. 111%. Now, compare that to the S&P, up 12.25%.
Schiff begins by pointing out the extraordinary outperformance of gold stocks this year. The GDX is up over 100%, and the smaller cap GDXJ has soared more than 111% compared to the S&P 500's 12% gain. He stresses that he hasn't been shorting the market, but has expressed his bearish outlook by being bullish on gold stocks, and it's paying off big. He reminds viewers that despite doubling this year, gold stocks are still cheap compared to their long-term potential. Over the past decade, the GDX has compounded at nearly 19.33% annually, outpacing the S&P's 14.91%, and Schiff believes we're only in the early innings of a much bigger move. He warns against waiting for a pullback, saying these stocks could double again and again as money continues fleeing overvalued equities and overpriced bonds. Silver is showing powerful technical strength, trading above its 50 and 200-day moving averages and forming higher lows in a clear uptrend channel. Schiff highlights key resistance levels around $42.45 and $43.25. Breakouts above those could open the door to much higher prices, potentially targeting $48 and beyond. But Schiff's biggest warning is about the Federal Reserve. Rate cuts, he says, are inherently inflationary. By choosing to cut rates into 5% inflation, soon to be 6% or 7%, the Fed is effectively abandoning its inflation fight to protect employment. That decision destroys the long-term value of bonds, discourages foreign buyers of U.S. debt, and weakens the dollar, all of which are rocket fuel for gold and silver. He predicts central banks will continue to offload U.S. treasuries and increase gold reserves as they hedge against a declining dollar and rising inflation. For Schiff, this is why investors can't afford to wait. He's been urging people to own gold since it was under $300 an ounce, and he believes that those who fail to act now risk getting left behind as gold and silver enter their most powerful bull cycle in history.
That's nothing. The GDXJ is up 10 times as much as the S&P 500 this year. 10 times as much. Do you think they talk about that on CNBC? No, they don't. They don't talk about that at all on CNBC. Now, The 12% return on the S&P, that's about the same as on my foreign bond fund. So my clients this year just buying short-term foreign bonds are making as much money as people taking a risk and buying the S&P 500. Now, if you look at my dividend payer strategy, my foreign dividend payers, conservative dividend paying stocks, it's up better than 43% on the year. 43, close to 4 times the return on the S&P 500. Now, this is the first time in many, many years that fund has beaten the S&P, but I think it's the beginning of a long trend. But what's really significant about the gold stocks, I did the math. Over the past 10 years, the S&P has returned average annual compounded gain of 14.91%. Now, that's a great return over 10 years, 14.91%. It's much more than the historic average, but that's a big return. Compare that to the GDX, which is up compounded over 10 years, 19.33%. So about 25% greater return compounded over 10 years in gold stocks. So during those 10 years, a lot of people are making fun of me. Peter's this perma-bear. He's telling people not to buy the U.S. stock market. That's correct. I told people not to buy the U.S. stock market. I told them to buy gold stocks instead of the U.S. stock market, and now they're better off, at least if they started 10 years ago. Now, they're also better off if they started 3 years ago. There are a lot of time frames where they're better off. In fact, if they started 3 years ago, they're way better off, even more so than if they started 10 years ago. Now, of course, the problem is some people didn't have the patience to wait it out, right? There were people who bought gold stocks on my recommendation 10 years ago who sold them last year. That was terrible. They threw away a winning hand. I mean, I tried my best to prevent it. Whenever one of the guys from Europe Pacific Asset Management or told me, hey, this guy is selling, I called him up personally to try to talk him out of it. And, the reason everybody gave me, look, I'm waiting so long, and now Trump is president, he's going to do all this. I'm tired of holding these gold stocks, I had record withdrawals from the Europe Pacific Gold Fund, EPGIX, in the fourth quarter of last year. And then in the first quarter of this year, people sold the fund. And they didn't just sell my fund. People were calling up the brokers that I work with and selling their individual gold stocks at the end of last year. Stocks that have doubled, some have tripled since people sold them against our recommendations. Yeah, we made a little commission when they sold, but we told them not to sell. I told people not to sell. But here's the bigger deal. The stock market is up 14.91% compounded for 10 years. It's expensive. The U.S. stock market, by any way you want to measure it, is overpriced. Now, that doesn't mean it can't get more overpriced. In fact, if they create enough inflation, everything's going to go up in price, including stocks. That's why I'm not short. Other people say, Peter's this perma-bear, but I'm not short the market. None of my clients are short the stock market, right? So I haven't just been shorting the stock market, and that's not how I've expressed my bearishness. I've expressed my bearishness by buying gold stocks. That's how I've been bearish, by being bullish on gold stocks, and the trade is working out. But the point I'm just about to make is that while the S&P is up 14.91%, it's expensive. The GDX, that is up 19.33% over the last 10 years, is cheap. So even though gold stocks have doubled this year, if you buy them now, you're getting them cheap. Now, are they as cheap as they were? Obviously not. But they're still cheap in the scheme of things. They're still cheap relative to where they are going to go. So don't get into I can't buy them now. It's too late because they've doubled. Yeah, they'll double again and double again and double again.
This is why Peter Schiff calls gold and silver the ultimate safe havens, not just for protecting wealth, but for growing it when everything else breaks down. If gold stocks can outperform the S&P by 10 to 1 in a single year, what could happen when the Fed actually cuts rates and the dollar weakens even more? What do you think? Are we just at the start of the greatest gold and silver bull market ever? Or will the Fed somehow manage to cool inflation before metals go parabolic? Could we see silver above $50 and gold toward $4,000 before this cycle tops out? Drop your thoughts in the comments. I'd love to hear where you think we're heading. If you found this breakdown valuable, smash that like button, subscribe for more daily recaps, and turn on notifications so you never miss an update. This next phase of the market could be historic, and you don't want to be the last one to prepare.